All right, there we go. So we are recording, and afterwards you will be able to. I'll upload this to the Patreon. You'll check it out if you want to, or miss anything, or for everybody who wasn't able to join us at this hour. So let's do as we do. Today is January 6th to check. And it's a new day, so let's start a new chart. Should be a saying. Be one of our mottos. New chart, new start. I don't know, something along those lines. Let's zoom it out real quick. Let's just touch base with our reality here. We are in 2021. We are high above anywhere we've ever traded. We hit a new all-time high again last night. It's like every day for almost every day this year. Almost every day in 2021, we've had a new all-time high. That is wild. Man, I had really bullish expectations for this year, but none of them were anywhere near what we're seeing right now. All right. So we're zoomed out. This is the quarterly. This is not really going to be a player for the next 84 days or so, but might as well mark where this yearly closed. Things are looking crazy. There's really nothing to be said. We're seeing RSI at an all-time high, with price at an all-time high. So things on the quarterly look good. Monthly is a little different here on the monthly, but it's always good to just recalibrate our minds, recalibrate what we're thinking, how we feel about things, and zooming out is just the best way to do that. So on the monthly, gosh, this is going to be annoying today. On the monthly, this is the fourth monthly candle in a row of beautiful green candles. Things are good. If you look at our MACD on the monthly, we have a monstrous swing in the bullish momentum. Unlike anything we've ever seen, probably. I would say on the monthly, that's probably a safe call. RSI gets a little more interesting. We see that the high in RSI on the monthly wow, was in December of 2017 at a 96.3, an incredibly hot market. Wild, absolutely wild. Currently the monthly at 85.14 today. So some of you may be thinking, do we have bearish divergence then? If you weren't thinking that, that's okay. But you should be. You should be thinking, is this bearish divergence? Because we do have a high. Right now, we have the highest price point ever, but we don't have the highest RSI on the monthly ever. So the answer, man, this is going to be the worst. This is going to be the worst recording yet. I'm going to have to keep clearing my voice. So the answer is yes and no. The answer is you have the right idea, but we haven't seen, or we don't know. It would be, I guess this is the best way to put it. We would have bearish divergence if RSI started trending back down. We don't have that yet, so we can't say this is bearish divergence because RSI is still moving up. This may not be the high, and in fact, it's likely it isn't the high. We could even see something similar to back here on the way up to 96.3 on the monthly. And that's what we'll expect to see by the end of this run, is we want to see a new high on RSI. We may even get fake outs like this on the way up. And what those are going to do is trap positions in the market, scare them out of their positions, and suggest that, oh, maybe we have a monthly bearish divergence forming, and hopefully shake out some hands. So that wouldn't surprise me. But when or if we get it, not going to be shaken by that, and hopefully no one else will be either. So we get down to the weekly, it's when things start getting a little more familiar. MACD looks great, just like every other time frame we just looked at, MACD looks great. We have alerts over here. On the weekly, the highest point. Look at how monstrous this has become. If you guys have been here, I know there's a lot of new people with us, and it's awesome to have you guys. But if you've been around for months now, you'll remember how many times we looked at both of these values, not just on the weekly, but also on the monthly and also on the daily. And we just eagerly awaited breaking through both the 2019 highs right here on the weekly and the 2017 high as the big boss. And really, as soon as we did, on the monthly, we saw the initial break of 2019 and price went crazy. That was back in late October and early November. And let's see, in December, we broke the 2017 high. So the weekly is in great position. We have a high, or we have the highest point in price and the highest point on our MACD histogram. That isn't any kind of divergence. That's what I call no divergence. And that's what we want to see. We want to see no divergence, because when we're looking at highs, the only kind of divergence we can find is bearish divergence. It's not really what we want in this rally. So no divergence is the best we can ask for when we only have highs to look at. Weekly, RSI, same thing. Same thing. We have set a new RSI high versus 2017. We have long awaited that. Very good. Again, this is the no divergence situation, but saying no divergence on your highs is essentially the same as saying we have no problems. There's no issues there. So that's wonderful. We're really far away from any moving averages of significance. Like, we can we can pop on the five moving average on the weekly and say, price is following that, sure. But when moving averages get that small, I don't find them to be great indicators. As you can even see here, we've had candles trade below them on the way up here on this rally, and even open below them. So not the best, not the most useful. What we do see, which is pretty spicy, is that the weekly did almost touch this 5, but just missed it. So again, the 5 is not really looking like a very useful indicator here on the weekly. Let's update. We have our middle Bollinger Band, which we actually just had up on the chart, but I figured I would put it this way. Figured I would put it on separately for you. Middle Bollinger Band on the weekly. We expect to see tests to this 20 moving average. We expect to in a bull run. Why do we expect to? Well, when we look back at history, we see that is very common. That's kind of the course that historic bull runs have taken. We see 1, 2, 3, 4, 5 touches on it on the way up in 2015 to 2017's run, and as soon as candles closed below the 20, so as you can see, they really didn't. Some of them may have closed very, very close to the 20, but they really pretty cleanly. These right here might be the only exceptions. These two small weeklies that were both green. They didn't really see any selling pressure. And you can see as soon as we meaningfully closed below this 20 moving average on the weekly, we began the bear market. This has been a historical, very important value that we did not get in 2019. So this is actually starting to be a little uncomfortable. This was one of the indicators that we said, hey, this is different from 2019. 2019's rally was failed. You can see as soon as we lost that 20 again and rejected, lows were not too far away. So this is a little uncomfortable as we have not come back to it yet. Thankfully, we did spend 1, 2, 3, 4, 5, 6 candles testing it, arguably back here as well, 7 in May. So we do have more support there tested than we did in 2019 where we had none, but it is a little uncomfortable, I can't lie. really would have expected to test this earlier. Earlier on this rally, as soon as we got to the 20s, this became a really logical place to look to retrace to. This is actually the projection we had made based on the previous bull run, was that we would see, it was 17.1 at the time, but anything under a new all-time high. So when we were near 20,000, this would have been really a move that would have made sense to what we've seen in history. 20,000 to 13,000, we would have tested that 20 and then moved back up. We can speculate why. We can speculate that this is different, but it's not really productive. What we can really take away from this is we do expect to test it eventually. And we need to keep an eye on it, because this is kind of strange behavior. We may be seeing something in Bitcoin that we've never seen before, and that could be a good thing, or it could be a bad thing. I'd wager it's a good thing, though. Ichimoku, nothing of importance here on the weekly. So what we like to do as well is let's take a random time frame that we haven't looked at in a long time. How about 10 days? Let's see what the 10-day has for us. I think this is a good practice simply because it keeps you dynamic and it keeps you thinking in different ways. Ichi, not much there. Probably not going to be too much on moving averages either. Nope. That's as expected. So 10-day, reflective of the weekly and the monthly. You'd be surprised how often this isn't true, though. You would think that logically, okay, if on the monthly we've reached this high and on the weekly we've reached that same high, you'd expect everything in between to reflect that same movements, but sometimes it doesn't. So that's why I like to mix it up here. But either way, we're above the 2017 high, so all is well. Interesting here on RSI. We still have some ways to go. 95.6, let's just say, for a new 10-day RSI high. So that's actually somewhere near the, kind of related to the issue we saw in the monthly, is that we still have room up to go to invalidate some of these issues, but we don't see this as a confirmed high yet. It's still continuing up. So there's really not a lot to worry about. Let's throw on some Stotch, just because we're on these long time frames. Yeah. Stotch is not my favorite indicator, but occasionally it's interesting to throw on there. All right, 10-day, you didn't really give us anything special. What you really did is you just confirmed that, we look here at this candle clustering, we had a 30-day period where we did find resistance at 19.3. So it doesn't really mean too much, but let's just go ahead. Let's make that a little bolder. And every time we find evidence that this is a strong area, we'll make it a little bolder. Okay, so let's zoom it on into the 1 day. Where are we? Where are we? Out in space. That's the answer. That is the only answer. Let's take a look here. February to March 2020, the spookiest of times, but in hindsight, the good old days, the discount days. We had a 63% retrace. This is my only technical explanation as to why these retraces now are so puny. We've done it before. I'm not going to do the whole thing again, but we, if you were interested, I would advise checking out what's called BLX. You just type in BLX. It's the first thing that comes up on TradingView, Brave New Coin Liquid Index. And what that is it's just pieced together. It's a pieced together data from exchanges as far back as Bitcoin has, essentially. So it's not one exchange. It's kind of daisy chained together data that allows you to look back farther. And long story short, what we see is in previous bull runs, we've had multiple large retracements, multiple. They do seem to be trending a little on the smaller side. The farther you go back, the larger these are. At one point, we were seeing 50% retraces. And then in the previous bull run, so 2015 to 2017, really, we were seeing multiple, and we can see these here. We looked at them quick, but again, I'm not going to go super in depth with the history of this, just because I know we have a lot of new people joining us. Pick a spot anywhere on the bull run, previous bull run. Look at any high, look at any low, and you're going to find that pretty much we get the exact same within, within reason. We get really extremely similar retraces. So I just picked out these three, 41, 37, 38. Close enough. If you look at all of them, pretty much all of them are roughly 40% all the way up. Until we reached our cycle max in 2017, and we did a 85% retrace. This is the typical Bitcoin bull peak cycle to bottom of bear market, 85%. We don't see this. We really don't see this 63%. It's very odd in its timing. Can be explained on the weekly, as it basically was a retest of the 200 weekly moving average, but this is my only technical reason as to why perhaps these retraces are so small. So we saw a 19% in May, 20% September, or October to September. Wait. In early September, 21%. Essentially 20% and 20% if we just look at it ballpark. And then at the all-time high, this is the strange part, 16.9. So this breaks our pattern. We saw what is essentially 20% retraces, all of a sudden 17%. Right before that, let's see, 10%, so not really even a retrace. And it's just getting wacky here, isn't it? 10%. And there we go. So these 10%, I'm really just not even going to call a retrace. I really would just consider them hunting margin positions. So when we pull back 10% in either direction, what that means is everyone who is trading leverage over 10x is going to be liquidated in the wrong position. So really what I think they are is stop loss hunts, looking to liquidate high or heavy margin positions before making a next move. What we can see is, you guys will probably remember this in the live stream. I said, this is a $7,000 sell-off. It's so spooky, right? But it's 20%. That's what we've seen. We saw a 21%. So back in September, this is actually a larger sell-off. 21%. But it was only $2,600. This is the reason why we don't think in dollars here. Dollars? No, don't think in them. We're going to be thinking in percents. Because dollars are going to continue to trick us. As price moves up, they're going to become less, or I guess more and more deceptive. This is a $7,000 sell-off, the largest maybe sell-off in Bitcoin history, but it's only 20%. That fits what we've seen. There's nothing to it. Not a big deal. And as you can see, instantly we've moved back up. The next day we bullish engulfed, set a new high today. So let's see where we are. I just got off on a tangent there. Off on a tangent, but that's okay. So the daily similar situation to many of the time frames we saw is we don't have a high in RSI yet. We don't have the highest high in RSI yet. But while that could be bearish divergence forming, I don't know. The way I use this is, but what we do see is that this high is higher than any of the local highs. So that would be May, August, October, September, November. When we zoom back, we haven't exceeded December's high. So we could have technically bearish divergence forming here in this direction, but locally we're okay. This is going to be for a long-term view. And really the way I interpret it is we're good on our highs recently. RSI is comparative. RSI is is similar to like a moving average. If you have a chart that doesn't have a lot of data, you won't be able to get RSI data because RSI data is based on the previous data. So I think its standard is 12 or 17 or something candles back. And what it's doing is it's measuring strength of selling and buying compared to the previous strengths of selling and buying. So what this shows is that this is the highest, strongest move in RSI on the daily in quite some time, at least in the data that's being included in this calculation. So I wouldn't consider this bearish divergence. Textbook TA might. What I really interpret this as is, look, we have so much room to go. We have up to 94. We're only at 84. The daily has plenty of fuel left. By the end of this run, by the end of this bull cycle, which could take, God knows, all year, could take till the end of 2021, I will fully expect to see a 94 RSI on the daily, higher 95. But right now, not really worried about it. We really are seeing bullish action there. Daily MACD is in the same situation, I believe, yes, as RSI. It's the same situation. We're just a little bit underneath that previous high in 2017. What we do see is that as of December 15th, we have had nothing but bullish momentum. It apexed briefly December 20th, briefly on January 3rd, and continues to pick up momentum. You know, we've had single fake out candles of momentum loss that haven't really done anything. These probably line up with retraces. Not really. A little bit. But now, yesterday we closed with bullish momentum increasing. And today, where we are, though, we can't really count this candle. We have 8 hours left. What this says is if we close at 34.8, that will mean that the daily is still gaining momentum. That's a good thing. Is a good sign. 20 moving average on the daily also has not been tested in quite some time, which is interesting. This market is like honestly, this market is just more bullish than I've ever seen it in my entire life. This is what it is. It's scary how bullish it is, but we remain in trend. Ichimoku very happy. Ichimoku Cloud very happy. I need to do a video on Ichi. It's something that looks complicated, but really isn't. It's actually very simple. It's green. Let's make it purple. What Ichi does in the most simple term, is Ichi takes the highs and the lows, the highest point of price and the lowest point of price in the last, you don't have to get into numbers, but in the previous set amount of candles, and it essentially divides them by 2. And that is where these lines go. The green, the TK, which I'm about to label here, looks back less. So it looks back, I'll just give you the numbers. I didn't want to confuse you, but I'm going to confuse myself unless I just say these numbers. So the TK, the green line, looks back 9 candles. So it would look back to the 28th. And what it's doing is it's saying the lowest point in price, roughly the lowest point in price and the highest point in price divided by 2, and conveniently that's this middle line here. So I don't have these values perfect, that's why it's a little bit off. Divided by 2, so right in the middle, that's where the TK is generated. The Kaijun, same thing, except it's looking back 26 candles. 26. Maybe I got the candle lengths wrong because that's not lining up, but essentially the same thing. It's looking back farther in data than the TK, and it's telling us where the middle where the exact middle between the high and the low in that candle set is. So there's a really simple explanation. And what we find is these are very important values. They tend, wow, that's spicy. They tend to act as support and resistance, and they tend to be a great indicator of momentum, and as well as they seem pretty good at projecting out support and resistance into the future, which is a rare quality for an indicator. So here's some spicy stuff. This is why technical analysis is always a learning journey. As you go, you learn how to use each indicator, each tool, and then to truly master them, it's not just about knowing how to use them, it's about knowing when to use them, but also combining them together and finding things that maybe not other people aren't looking at. So right here is a really interesting value to me. I just circled it. This is at 30,880. And the reason this value stands out to me is we see two indicators agreeing. We don't know what they're necessarily agreeing on, but they're agreeing on something here. The Ichimoku cloud TK and the 10 moving average are virtually on top of each other. And what this usually suggests to me is that this price point is likely strong. It's likely to find support here if we do see a sell-off to that level at all. At this moment, it is a very strong level. And what we're doing is combining what two indicators are telling us and trying to infer more information from it. So what I like about these things is the amount of people who are looking at that is probably very small. Probably very few people today who had the 10 moving average and the Ichimoku cloud on the daily up and notice that they're overlapping. So 30,880, very interesting level. Go to the 12 hours. As you can see, the 12 hour, as it does the same thing on the 12, Ichimoku cloud does the same thing on 12 hours it does on the daily, except the 12 hour, obviously every 2 candles is 1 day. So while it is still only looking back the same amount of candles, which is supposed to be 9. I don't know. Oh yeah, I know why, because this is the lowest point in price. Derp, no wonder. Good enough. Still looking back the same amount of candles, but that only gets us half as much history because we were on the daily, now we're on the 12 hour, so every 2 candles represents 1 day. So these values have moved up, which shows us that momentum has increased. I'm going to make this a little less visible because this is the 12 hour. And here's something interesting already. We have the 12 hour Kaijun, the slower, the longer looking Ichimoku cloud line. Again, we see it, this isn't quite overlapping the same way we saw on the daily with the 10 and the TK, but we have them very close together. So I'm going to make a little box here just to remind myself that we have not only pretty strong horizontal support, but we also have the 12 hour TK there. So another level of strength. That gives us 2. Gives us 2 levels of strength. We could in theory just make this whole thing a box, but I like to keep them as specific as possible. So 12 hour, all right. 12 hour Bollinger Bands. Let's get rid of some of this. We did test it on the 4th. You guys probably remember me talking about that we wicked, bought back up, and that looked rather bullish to me. So let's see if I was right. 12 hour MACD is very weird looking. Currently in a waning momentum candle, but this is a very strange structure. The 12 hour has been weird. You guys have been following along for the last few months. It's been a weird time frame. Don't know why, but the signals we've been getting on it have been not so great. The redeeming factor at all, and this is probably all I'll say on the 12 hour before we move on, because it is a strange one. All time frames are valid and useful, but we had bearish divergence on the 12 hour until the 3rd of January. So from October 22nd at like 10K, we had bearish divergence all the way up to January 3rd at 34,000 before invalidating it. And that same move, though this is ugly, that same move is really what we're looking for on all the time frames so far that we've looked at that didn't have the highest point in RSI at the highest point in price. So I believe that was the monthly and the daily. We're looking for that same move. You know, we had this bearish divergence on the 12 hour for months. It was very threatening. And then just, boop, move up, done. Now it's invalidated. That was a great sign. Great sign right here. Yeah, the 12 hour is a strange one. We do keep an eye on it, but for whatever reason, it just behaves strangely. I think we're good there. So the 6 hour was a big winner the other day. So look at the 6 quick. Six hours sloppy with this 20. But that was a big factor in remaining bullish on the 4th. Was not only did the bottom wick bounce off of the 12 hour middle Bollinger Band or 20 moving average, this white line here in the middle, but then closed, even more importantly, closed above it on the 6 hour. That was a very bullish sign for me. Whenever you see price action go beneath a Bollinger Band, and this applies to almost any time frame, but like everything, the smaller the time frame, the less significant it is. Whenever you see virtually on any time frame something trade below the Bollinger Band and then close above it with a long bottom wick, that is usually a bullish sign. That usually does hint at that buyers are hungry at that price. And that's what we got. We don't see really anything too valuable here on our moving averages, except here we go, 12 on the 6 hour. We have another, this is the 50 moving average. The 50 moving average agrees with our 29,321. We see that that's overlapping with the other signals that we got there, which just looked at. I believe this was like a monthly close or the monthly close, yearly close, which isn't likely to be an important value. I forget some other stuff. Just rewind it. You'll see. But another piece of agreeing information right there. That's excellent. Let's look at our MACD. So there's 2 takeaways here. One, I'm sure we have bullish divergence on the 6 hour because we already did. We actually looked at this, which was another piece of compelling evidence. We were looking for a bounce down here. We looked at this on the 4th or the 4th. Yeah. Is because we have a higher low in price. So starting on the 31st of December right here, we have a low. And here, or here, you really can take it from wherever. The 4th or 5th of January, we see that that low is higher. The low came up. That by itself is not important. But what is important is that our MACD didn't agree. Our MACD was telling us something different. It said back here, we had a swing low, but the 4th was a lower low. So it's saying this is a stronger move. It's saying that the 4th selling was stronger selling, yet price, man, that's getting sloppy looking, yet price did not move lower. It made a higher low. So this is what we call bullish divergence. There's other forms of it as well, but simply whenever price and RSI or price and MACD aren't moving together, you have some kind of divergence. So if we look at price, I'm going to pretend I'm drawing RSI. I can like draw it here. And this can be used on any indicator. It doesn't have to be RSI and MACD. It can be anything. So I'm going to draw this hypothetical. This is what we would expect the RSI to do. follow with price. So if at any time our RSI doesn't follow in this same way like this, we can look for divergence. Same with MACD, same with any oscillating indicator. Doesn't have to be these two, but these are just my favorite. And so we see that that's true because instead of it looking like this, we can see right now, right here in these examples, maybe if I hide this candle, so I'll make it better. We can see that this shape we just drew is not what we see here. It's pretty similar, but it's not the same. And those differences are what makes it important. Because if we look at just these yellow arrows, it's evident on both MACD and RSI that we had a low and a higher low, but both indicators told us that these are lower lows. So these aren't lining up. They're not the same. And since these are lows, it is a bullish divergence. You can only find bullish divergence on lows. You can only find bearish divergence on highs. It's unsatisfying, but that's just the way it is. So anytime price isn't doing exactly, or anytime RSI and price aren't doing the exact same thing, that means pay attention. So we just came off this bullish divergence, which pretty sure, yeah, we had this marked. This is from the patron post update, so we can see that we were already looking at this bullish divergence back when it happened. And that's still in play here. And we flip back to the buying side. However, we do have a higher high in price, and we don't have a higher high in MACD or RSI yet. These are tiny little moves upwards, which by itself would be threatening, but what I interpret this as is we need to see price continue to move up. We need to see RSI continue to move up and MACD continue to move up. And if we do, then we don't have to worry about it. But if we start moving back down and testing lows, we are almost certainly going to paint bearish divergence then. So it would be back-to-back divergences, which is very common. Typically price shows bullish divergence, then bearish divergence, then bullish divergence, back and forth. And that's great because it helps us spot reversals. That's its main purpose, looking for divergence. Gee. Ooh, spicy, spicy. Cross down. I think we may have looked at this yesterday, but you'll see these arrows here. They're created by Ichi, by the Ichimoku cloud indicator. So right now, just these lines in this cloud. And these are created automatically when the green line crosses below the purple line. You get a cross down, which is a bearish signal. And when the green line crosses up above the purple line, you get a cross up, which is a bullish signal. If we look back here, we can see that last time we got one, we immediately crossed back up. That's not too troublesome. But what the most important part of these arrows are is where price is when they happen. So though this is a bearish signal, this cross down on the 6 hour, price is above the cloud. The cloud is this green and sometimes red blob. And you can consider this kind of the middle of the playing field. So when price is above this middle of the playing field, this cloud, crosses up are very strong. When price is below this cloud, below this middle point, crosses down are very strong. When you're in the middle, both are equally weighted. Both are equally strength. So this cross down is actually considered very weak. The reason being is that price is above the cloud. Oops, now we got nothing. So this is not a super worrisome sign by any means. My candle's back, there we go. Ooh, I think that's about all on the 6 hour. Let's move it down to the 4. We have a cross up, so we had a cross up on yesterday on the 4 hour, and that led to a new all-time high. See, there's a great example. Sweet, there's a great example. We had a cross up, Some people are probably wondering why there's no cross down here. I don't know. I honestly don't know. I have no explanation. This just happens on Ichi. For some reason, you don't always get the arrows. I wouldn't worry about it. But here's a great example. We got a cross up. We were above the middle field, above the cloud, and so that led to bullish price action. On the 6 hour, we got a cross down. It's a bearish signal, but we're above the cloud. Didn't really do anything. So we see our 12-hour TK line is lining up very well with our 4 hour right here. They're virtually on top of each other. So to me, that is two different time frames agreeing with each other. So I'm going to make this a little bolder, suggesting that 31,762 is a strong value, or at least strengthened by these agreeing indicators or time frames, whatnot. I'm going to place the 4 hour on here as well. Make it very small. I'm going to make it not so easy to see because this is not as important as our 12 hour or our daily. So there we go. But I do want to keep track of what price that's at, and that's 32,878. So now what you can see here is we've really built a castle of values. We have 29,321 as what is likely a very strong support. Oh, even below that we have a few values. I believe that this was the daily. Daily, 27.4, 27.9. So we have multiple support values here. These can all be useful data points that we can look to if we get movement to the downside. So here we go. Here's more agreement. This is excellent. We had that, just to touch on it, we had that same bullish divergence we saw in the 6 hour on the 4 hour as well. I'm just going to leave this here, but we're not really going to look at it too much. This is really the exact same thing we're seeing on the 6 hour. What the heck? Okay. We don't have a higher high on RSI or MACD, but we have a higher high in price, so we can start looking at bearish divergence if we see more downside. But again, same as 6 hour. This also kind of sets us up for another move to the upside because that's what we keep seeing. What I was really looking at here is, there we go. We see the middle Bollinger Band on the 4 hour overlapping with the TK, Tenkan-san, as they say. Ichimoku Cloud's a Japanese thing, so all the words are hard to pronounce. Right here, we see the overlapping, and so usually I wouldn't give this 4 hour TK a lot of notice, but since we see them overlapping, this is suggesting that we might have more strength there than we would expect, so that becomes a more important value than we thought. 32,878. That's pretty much it on the 4 hour, I do believe. We got a little extra. We can see that the 50 moving average on the 4 hour is, this is just eyeing it one candle away. So in 3 minutes when this closes, almost certainly it will be touching this 30,880, which is the daily TK line. I'm going to bolden this one more time. Bolden that one more time, as that's the third or fourth, I think that's our third overlapping signal at that exact same price, 30,880. Finally, let's zoom it into the hour. Beautiful. I love it. Oh, I love it. We have a great example here. We have a great example that we're only going to look at. Well, actually, so this was 6, I think it was 12, 6, 4 hour support. I hate that it keeps defaulting to this massive text. Put that there. But we see that the 20 moving average on the 1 hour right there at that support line. So we're going to bolden that, even though I just unboldened it. Just good practice. But I'm going to get rid of that because there's something else here that catches my eye more than any of that. So let's hide everything so we can focus. These moving averages right here, we're on the 1 hour. The blue on my charts, just for everyone's for everyone's knowledge, the yellow. Now let's start. The white is always the 20 moving average, which is the same thing as the middle Bollinger Band, 20 moving average. That's always white on my charts. You guys can use whatever you'd like, though I highly recommend you just copy my layout. Use the same colors. Simply, if you're going to be looking at my charts a lot, it's going to help you follow along, especially if you're starting out. But most importantly is whatever you do, just be consistent with it. You don't want to be using different colors every time. Your brain is a huge fan of patterns. It loves recognizing patterns, and it's hard to recognize patterns if the details of them keep switching up. So keep them the same. I would highly recommend using my setup. White is 20, yellow is 50, blue is 100, green is 200. And what you can do is you can set these once. You can just double click a moving average if you're using the multiple MA indicator, which I highly recommend for anyone, especially if you're using a free version of TradingView. Just go up here to indicators. Ooh, you can't see. Go up to indicators and then search for multiple space MA space this. It's by, I can't pronounce this guy's name, AYTUGKOSEOGLU1. And what that does is it just counts as one indicator, but it gives you 1, 2, 3, 4, 5, 6 moving averages on just a single indicator. Anyway, double click it, set the 20 to white, the 50 to yellow, the 100 to blue, 200 to green, and then go down here to this box where it says defaults, click it and just hit save as default. And what will happen now is anytime you add this to a chart, it's going to keep this color coding. And that's going to be that's a helpful little pro tip. So back to what I actually was talking about before where I got sidetracked there. I'm loving what I'm seeing right here. So one, we have again more time frames and more indicators pointing at this same value. This was the 4-hour TK, which overlapped with something else. I don't know, go back, which overlapped with something else, and now is again overlapping with both the 50 and the 100 moving averages on the 1 hour. So I'm actually going to change this from dotted to a flat line, as this is now appearing to be locally probably the most important support locally. I'm going to lock this so I stop messing with it. That's awesome. But what really caught my eye here is how they're interacting. So we can see right here, again, 50 is yellow, 100 is blue, and so thus the 50 is a shorter moving average. It's looking back only 50 candles, where the blue line is looking back 100. We see the 50 crossed beneath the 100. Typically, this is what is known as a bearish cross or a death cross, and it's supposed to be a signal of selling power or bearishness. However, we talk about this all the time in the stream. We don't see them this way for one reason, and that's because the blue line, the longer moving average, was trending up during this event. And again, this is not textbook TA. You're not going to find this in a book or something. This is just my observation in crypto. I don't know if this applies elsewhere, but in crypto, this seems to hit hard and often. We would suggest that this is not a valid, or it's unlikely to play out as a bearish cross, because the 100 is trending up, which is in the opposite sentiment as the bearish cross, and trending up bullish. Bearish cross suggests down, and we see that that played out exactly as we'd expect. This is the kissing that I talk about. This is a little deep steep of a kiss. The 50 then immediately wanted to cross back up over the 100. And this is due to the candles back, due to the price action that happened after this bearish cross. Where are my candles? There we go. You can see right as this bearish cross happened, literally right as this bearish cross happened, we hit a new all-time high. So if that's not an example of what I'm saying being true, I don't know what is. We got a bearish cross. I probably would have been the only person in the room, other than you guys and our fam, arguing that it isn't bearish. Everyone else would have been saying it's bearish. Boom, all-time high right as they cross. This is a powerful signal. This is a powerful signal that has a very high hit rate of it has a very high confidence, let's say. So that was more than I wanted to say about it, but I love that setup. It's like one of my trademark setups, and so I had to point it. Hourly definitely does have bearish divergence. We can see that the highest point in price is not the highest point in RSI. But we also have bullish divergence. We see the MACD here. This is on the red side. This is selling momentum. We see that these candles have turned darker red and now are beginning to get smaller and looking to flip back to the buying side. Up here, above 0 is buying momentum. Below, under 0 is selling momentum. Is red, buying is blue. These flips can give us great signs. They can give us good signals as to what's going on, especially when the market has a clearly established trend, which at this point is a bullish trend. But we see that we have a, right here is our low on MACD. This selling momentum is right here, and the previous selling momentum is back here. And again, this is the same bullish divergence we saw on the longer time frame. This is a much lower price, but the swing low, the selling momentum here was very weak. So this is actually a different kind of bullish divergence, but it's still the same idea. Price isn't doing the same thing as our indicators, and so we know, or we look for divergence. So we had a low point in price here on the 5th. You see that's MACD swing. And then we had another low here today on the 6th, and MACD had a stronger selling event, yet price didn't go lower than before. So that isn't the same. Price isn't doing the same as our indicator here on MACD, and so there's divergence. These are lows, so it's bullish divergence. Yeah, so that's a good sign. That can be a good sign. RSI though, this is pretty ugly. We see that right here on the 2nd of January on the 1 hour, this was the highest point in RSI and the highest point in MACD. And so we are in threat, under threat of a bearish divergence. However, this is just the hourly. And so a bearish or bullish divergence playing out on the hourly could mean, it could mean like a 4% move in either direction. Bearish divergence on the hourly doesn't ever really mean moon or doom. It just suggests what direction is likely, as markets tend to kind of flow from buying to selling back and forth. They make waves, and these divergences, especially on lower time frames, are kind of just showing us those waves. Unfortunately, RSI and MACD are showing us different pictures, so we have a little disagreement between those two, which, in my opinion, gives less weight to what either of them is saying. We want to look, it's basically saying look elsewhere, because we're not going to give you a clean signal. So the hourly is looking to roll over. We do have on MACD bullish divergence, RSI we don't, so that's meh. 4 hour losing momentum. 6 hours not losing momentum. 12 hours not losing momentum. Daily is not losing momentum. Weekly and monthly are not losing momentum. So what can we take away here? Well, the hourly looks like it may have a little upside here. We do have a descending high trend line. 51 minutes left in this candle, so just starting up, and it's broken that trend line. What I'm going to do is really quick look at the 2 hour. 2 hours losing momentum. It's not great. 3 hours losing momentum. However, is bullish engulfed to the previous candle. So let's see. Break it down. Short term. Short term, it looks like it is. Yeah, short term, it looks as if this very important value we found, 32.878, is in play. Definitely in play. If not even, maybe price actually actively wants to test it. And you know what I just realized here after doing all of this? There's another. We need to make this even thicker. This is the most important value now, locally, definitely. I just noticed that not only do we have all of these indicators at this level, all of these moving averages, Ichimoku cloud, etc., but if we look left, it's also like to the dollar, the exact high here on the 5th after we had sold off. So I'm going to actually drag this over here. So 32884, 32878. Yeah, that's in the terms of Bitcoin, that's the exact same number. We do see a little weakness on the smaller time frames. If that plays out, 32,884, this is very likely to hold. If not, even 34,450. But we do see minor weakness on the shorter time frames, but I will also give you guys this insight. That's really been true all the way up. We've been seeing short time frame weakness like just consistently, and it hasn't really played out, at least at this point. Like from October, meaning all the way from like 10,000, we keep seeing these smaller time frame kind of bearish signals that don't really accomplish anything. But if we do see that play out and we see 34,450 break, I'm going to look for 32,884. This is going to be very strong support. And if it isn't, or if it breaks and closes underneath this level, we do have other price points that we've identified here, but this will be not a good sign. This would be not a good sign that we have those measured move targets, which we might as well throw those up here for you guys too. Not a good sign in the short term for hitting these measured move targets if we break below. Oh wow. Here's some spiciness. So I just looked at we just threw this fib on here. And look at how closely these fib levels also line up with these values that we've identified. That's pretty spicy. Very close together. Anyway, that wasn't the point. The point was, if we see the greater or the longer time frames take back control, numbers start to get ridiculous. They really do start to get ridiculous. We take the high of the 3rd of January to the low, and we apply our fib tool, connecting the top, the swing high on the 3rd, with the swing low on the 4th, and we look at the 2 fib extension and the 2.618, and we can even look at the 3. That would be extremely, extremely bullish conditions if the 3 was our target. And those are how we get measured moves. That's how we do them here, at least. And so if we see these longer time frames take back control and buying bullish pressure returns, these are going to be the immediate targets. 43,700, that would be almost a $10,000 move. Again, aha, I tricked you and myself, but I tricked you all. Again, ignore $10,000 move. That's not, it's irrelevant how many dollars it moves up. If you have $1 in Bitcoin, or you have million in Bitcoin, it doesn't change your gains. Your gains are always just going to be percentages. So I think that 3 is probably really, really, really hopium. This is your hopium for the day. This is not what I'm predicting. However, this is what I'm showing is the likely targets if we get a significant break up. 43,779. If it's exceptionally bullish, 50,443. And if, honestly, maybe if it's a blow off top, which would not surprise me, to be honest, at either of these levels, a blow off top, and then a significant retrace would not surprise me in the slightest. But if we get those, I lost what I was going to say. Yeah, if we have an extremely bullish impulse to the upside, especially if we reach 55,000 without really consolidating or pulling back first, I will say high probability of retracement. To be honest, though, guys, though I do think that that would be a very probable place to retrace, I will not trade that. I will not sell there. I don't think anyone else should either. Make your own decisions, obviously. But you have lost nothing. Even if this is exactly how it plays out, you have lost nothing. If you sell here and you're looking to rebuy here and it never gets back there and it just keeps going, then you're screwed. But this, hopefully just seeing this can give you, and it's probably going to freak some people out, but some peace if we do see some similar move like that. And really what it is this would probably be a blow off top target at 55. And if we get a blow off top target, I would look for this standard, what we've been looking for, 40% retrace, which would bring us back down to 32,700-ish. This really strong support. Wow, that's actually freaky. That's freaky how accurate that is. From the 3 fib extension back to this strong support we identified today, it's exactly 40%. That's wild. I like that. That would be minus $22,000. This is why we don't think in dollars, we think in percents. This would freak people out just by seeing that number. That would fold a lot of hands. And in reality, what it really would do is nothing. It would just get people to fold. No one would really significantly be able to buy back in and profit. Wow, that looks really good. Anyway, we're not there yet. We're here. We're in the present. Real quick, I'll look at the 15. That'll probably be done. 15 just looks like it's coiling up, flagging out, higher lows, lower highs. It's likely we get some kind of move here today. Word. All right, so this probably took longer than I expected, as it always does, because I like to ramble. But I hope you guys got some value out of this. I hope you got some value out of it. And if you didn't, let me know. Let me know how I can make it more valuable for you. Next time. And yeah, let's just look at these really quick. What kind of price moves from where we are to the values we identified would be. $20-day moving average right at the, or the 20-day moving average. Wow, I'm a special person. Daily 20 moving average. 20% and one last value, right? Value, let's see. 44% back to the all-time high. All right. So none of these are really, am I suggesting this is the future? But since we're seeing patterns of retracement, it's always a good idea just to in the back of your mind have these things just there. For instance, right now from price, if it dumped to the 20-day or to the daily 20 moving average, that'd be a 20% retrace. That's what we've seen a lot. That is the that's the pattern so far. This 16% is back to our major support. That's similar to a retracement we've seen earlier, and the 40% retracement, which is the golden standard. At least in the previous bull run, puts us right about back on top of the all-time high with a little room above. That'd be 20,900 or 21,000-ish. So always good to have in the back of your head, where is a 40% move down from here? Where is a 20% move down from here? And as well, where is a 10% move down from here? Because we've seen those so far, except the 40% historically. So awesome. I'm done. I'll turn the recording off.